Hello and good day to you all from Frankfurt Main Tower. This is Helaba Capital Markets. My name is Thomas Kors. I'm in charge of the Financial Institutions Group. And next to my left here is Matthias Melms, the head of our Syndicate and Origination Department. Hi, Matthias.
Hello, Thomas.
We had a brief forecast at the end of last year regarding the outlook for covered bonds in general and also a few takes on the senior instruments. And obviously now it's a little bit later. We have seen the first trading month pass, and it would be interesting now to see whether what we forecast then came true or whether we had different developments. So, Matthias, why don't you tell us a little bit about your first 4 weeks?
Yeah, as you can see on the slide, we have had a real lively January, but it was, on the other hand, completely different to the January we have had last year.
In what respect?
Oh, that's an interesting question, because as you can see, covered bonds are down to 13 billion from 30 billion last year, and this has an obvious reason.
Which is?
Which is, the answer is nearly similar to the answers on all questions regarding the financial markets, ECB. Because as the ECB has introduced another round of TLTRO last year in December, after our forecast, it has consequences of the issuance activity on banks.
Hasn't there also been a little bit of a deviation of investor flows to another asset class or to a different issuer?
Absolutely. We have seen much more issuance volume in SSA, up to 60 billion in January, and we have had an old, new player in the market with the European Union.
Oh, finally something good about the European Union. So, what happened?
What happened? The EU has introduced a SURE program, and this needs to be refinanced by large issuance activity. This was done in January, and for the rest of the year, we expected much more issuance to come from the European Union to finance another program.
And does that mean people are now buying only SSAs and there are no covered bonds coming? We had a forecast saying that we expect more issuers to come to the covered bond market as well. Didn't that happen?
On the one hand, we have seen new family members in the covered bond market. So commercial banks from the Czech Republic were active on the first euro-denominated benchmark transaction. We are seeing KAB Hana from South Korea with their first transaction in the market. And just today, Agenta Sparebanken from Belgium was in the market with their first covered bond.
Oh, okay. So that's what, 3 new issuers already in 4 weeks? If that speed continues, we're going to see quite a lot of new issuers. Do you think it's going to continue?
Unfortunately not. To be fair, we have seen now 3 new issuers in the euro covered bond market. We expected some more to come, especially from Asia, and hopefully this takes part this year, but if not, then definitely next year.
But at least the issues come from jurisdictions with quite sizable mortgage markets, so I hope, or you probably hope more than I do, that there will be more issues from those same new issuers going forward, right?
Absolutely. As we have seen it in the past, you are not issuing a covered bond once, but several times, so we can expect much more to come from these 3 new family members we have seen in January.
So sustainability also in the frequency of covered bonds going forward.
I think that's the DNA of covered bond.
Great. Now, of course, as an originator, you talk your book and you like it, so that's a good thing. But the proof is in the pudding, and the pudding in this case would be the secondary market performance, because, as we know, investors don't just like to buy bonds in the primary market. They also like to see the bonds perform, and they like people to provide them two-way prices afterwards. And the man for two-way prices is not Matthias. So, Matthias, thank you very much for the moment. The man for two-way prices is coming on stage now. That's Oliver Hückel. Hi, Olli.
Hello, Thomas. Hello.
Olli is in charge of secondary trading at Helaba, and it would be very interesting for our audience, I think, to hear what the development has been there.
Yeah, for sure. Thank you. We have seen last year around 100 billion new issues in benchmark size in euro denominations.
In covered.
In covered, sorry. And this year we expect by far less. Why? Matthias told us the name of the game, ECB. ECB is giving the TLTRO to banks, so therefore there is no need to refinance all this stuff again by covered bonds. So therefore, unfortunately, we will see less issues compared to last year.
Yeah, but that doesn't have to be a bad thing necessarily, right? So because things that are few and far in between tend to rise in value.
The bad news for the primary guys might be a good news for us from secondary. That's right, Thomas. We expect a moderate, but we expect a tightening, ongoing tightening, as you mentioned it. Rare goods is becoming expensive, and therefore it should perform well.
Does that also feed off into the senior markets?
Well, I expect a nearly similar performance for the senior markets. It depends on the individual issuer for sure, but in a row I would expect it. I won't expect it for every SSA. Why? SSA, I expect that they have to issue more compared to the year before. EU we heard, but some regions, some countries as well, and therefore the performance there might be different from coverage and seniors.
Yeah, but so far it has held up pretty nicely as well, hasn't it?
Absolutely, absolutely. You see there is enough liquidity in the market, and at this stage all asset classes are performing well. So good start for all the asset classes by now.
Well, perfect. So I guess if you're an investor, you should be lucky if you can get your holds on some financial bonds, if you are lucky. But that's actually the question. Do people also come back in the secondary market to try to pick up these more and more expensive bonds, or is that just a one-way street?
Well, the good thing for us is it's not a one-way street. It's two-way business. I mean, there is a big buyer, obviously ECB, but you see some activities from other clients, from insurance companies, from investment funds, from bank treasuries. So therefore, we see a nice two-way flow by now.
Great. It's always good to see a happy trader, as it's good to see a happy originator. We had the honor of having both here today. So this has been Capital Markets Update from Helaba. I hope we are in a position in a few weeks or months to give you even better news about the development of the markets. For now, we say thank you very much for watching and sharing this time with us. Bye-bye.
Thank you. Take care.